Here are the headlines that matter today, the ones the mainstream outlets are glossing over. We are seeing a historic signal flashing in the precious metals market, one that hasn't failed in nearly 2,000 years. We have a government debt pile that has quietly quadrupled relative to the size of the economy, a ticking clock that no one in Washington wants to acknowledge, and perhaps most confusingly, we see gold skyrocketing while the price of oil and wheat is actually dropping. It doesn't seem to add up, does it? But it does. There is a mechanism at work here, a specific reason why your grocery bill might feel stable for a moment while the foundation of the currency rots away. And the most interesting part? It involves the stock market in a way you probably haven't considered. I've saved that critical piece of the puzzle for the end of this episode, so you do not want to miss it. Before we pull back the curtain on this, I have a small request. We don't have corporate backers telling us what to say. We do the hard work, the deep research, and the fact-checking to ensure you aren't fed fake news or comfortable lies. If you value this independent voice, please like, subscribe, and consider sponsoring the channel or using the Super Thanks feature below. It's a personal gesture that keeps the lights on and allows us to keep digging for the truth. History, you see, has a way of rhyming. It's almost eerie. If you look back at Rome in the year 284, or Spain in the 1600s, or even the Netherlands in 1815 and Britain in 1931, you find the exact same pattern. In every single instance, the price of gold and silver roughly tripled just a few years before the entire economic system hit a hard reset. And here is the cold reality. It has just happened again. We watched silver go from $22 an ounce in January of 2024 to $74 today. It more than tripled. Gold is surging alongside it. This isn't just a market fluctuation. It is the most violent rally we have seen in 40 years of data. When you see precious metals move this fast, it's not about the metal. It's a vote of no confidence. Investors are looking at the US dollar and they are flinching. They know that once that confidence breaks, the clock starts ticking down to a massive transfer of wealth. The system is designed to look complex. They want you to think it's too hard to understand, so you'll just close your eyes and trust them. But we can translate this into simple, actionable reality. To understand why gold is screaming a warning, look at the debt. Total US debt, government and private, has ballooned from about 160% of GDP in the 80s to 400% today. The banking system has loaned out so much money that the debt is now 4 times the size of the economy. And let's be honest with each other, the likelihood of that ever being repaid is practically zero. Do you remember 2008? The narrative was that we fixed the system. But look at the data. The total debt didn't go down. It actually went up. The debt pile wasn't repaid. It was just moved. In 2008, U.S. households were drowning in debt. Since then, household debt has come down. Which sounds good, right? But if you overlay the government debt chart, you see the trick. The government absorbed it. They took the toxic assets from the private sector and put them on the public balance sheet. Usually, a debt crisis brings pain. It brings a cleanup. But to avoid that pain, the government went on the greatest spending spree in history. They pushed government debt from 50% of GDP to 124% today. That is why gold is rising. A person or a business defaults when they can't pay. A government, they print, they devalue. Investors aren't stupid. They are flocking to gold because they know the only way out of this is to make the dollar worth less. But here is where things get even more intriguing, and where most analysts get it wrong. If the dollar is dying, why isn't the price of everything skyrocketing right now? We know from those historical examples, Rome, Spain, Britain, that eventually the story shifts. It goes from just gold rising to everything rising: shelter, energy, food. That is what a currency devaluation feels like on the ground. But look around. While gold tripled, oil and natural gas prices dropped by 30%. Wheat is down 30%. Home prices in the US have stayed mostly flat. This divergence is confusing. It looks like rigged data, but there is actually a logical explanation. It comes down to something economists call the velocity of money. It's a fancy term, but think of it simply. How many times does a single dollar change hands? If I pay you $1 and you pay the baker and he pays the farmer, that dollar creates pressure on prices. It feels like the economy is hot. But right now, the velocity of money has collapsed. In the 90s, it was around 2. Today, it's down to 1.4. The dollars exist, billions and trillions of them printed by the government, but they aren't moving. They are stuck. This is why inflation numbers seem to be coming down despite the government spending money like a drunken sailor. The money isn't circulating in the real economy. It's not chasing goods yet. And that word, yet, is the most dangerous word in finance. If you are finding value in this breakdown, please take a second to hit that like button or leave a comment. It helps more people find this information. So, where is the money? This is the twist I promised you. We aren't seeing hyperinflation in milk and eggs because the money is locked up in financial assets. Look at the US stock market wealth as a percentage of the total money in the economy. It is at the highest level in history. The vast majority of that printed wealth isn't in your pocket or mine. It's owned by a tiny fragment of the population sitting in stocks, accumulating on paper. It's frozen in the casino. But imagine if those investors suddenly get spooked. Imagine if they decide to cash out. That is the moment the dam breaks. If they turn into sellers, that wealth unlocks. It floods out of the stock market and seeks safety in the real world. That is when the velocity of money spikes. That is when people lose faith not just in the market, but in the currency itself. They scramble to get rid of dollars, buying anything tangible. That is the moment the price of everything catches up to gold. We believe this is likely to happen within the next 5 years. It's a long-term risk, but a massive one. However, and this is key, we don't think it happens tomorrow. We probably won't see this total collapse in the next 12 months. The system has a way of limping along longer than logic would dictate. But make no mistake, the conditions are set, the debt is there, the money has been printed. It's just waiting for the spark to ignite the velocity. We have to stay conscious. We can't just hide in a bunker. There are ways to navigate this: stocks, oil, crypto, bonds. They all offer opportunities whether they are going up or down. But you have to open your eyes to the reality that the financial ground beneath us is shifting. To recap, silver and gold have flashed a historic warning signal that has preceded economic resets for centuries. The government solved the 2008 crisis simply by taking on the debt themselves, creating a bubble that can only be solved by printing money. We haven't felt the full impact yet because the velocity of money is low. The cash is trapped in the stock market. But when that money moves, the real devaluation begins. This is the time to be vigilant, not complacent. Thank you for trusting us with your time. If this helped you see the bigger picture, please subscribe. And again, consider supporting our independent work through a sponsorship or super thanks. It means the world to us. Stay safe, stay informed, and I'll see you in the next one. Before I sign off, I want to take a brief moment to speak to you directly, just for a second. We live in an era of incredible noise. You are bombarded every single day with headlines that are designed to scare you, or worse, to distract you from what is actually happening. Cutting through that fog isn't easy. It takes time. It takes late nights, digging through dense government reports, cross-referencing historical data, and verifying sources 3 or 4 times just to make sure we aren't adding to the pile of fake news out there. We take that responsibility very seriously because I know you rely on this channel for the unvarnished truth. But independent journalism, real, deep dive analysis, is expensive, not just in money, but in man-hours. We don't have a massive corporate safety net or a boardroom telling us what opinions are safe to share. We only have you. That is why, if you found value in what we broke down today, I'm asking you to consider supporting this work. You can do that by hitting the like button and subscribing, which helps the algorithm find others like us. But if you are able, please consider becoming a channel sponsor or using the super thanks feature below. It's not just a donation. It is a partnership. It is you telling us that facts matter and that this level of research is worth preserving. And please don't just watch, participate. Leave a comment below. Tell me if you think the velocity of money will spike sooner than we think, or if you disagree with the timeline. I read your thoughts and they help shape where we look next. Thank you for being the backbone of this community. We are in this together, and I will see you in the next one.